All right, I do think the popcorn count is holding steady, so let's go ahead and start. Welcome to this open forum, the impact of AI on the insurance industry by 2030. I wanted to introduce myself first and talk a little bit about the forum, and I'll turn it over to the two panelists that we have with us today. I'm Sherry Chan. I am the Chief Strategy Officer of Adidot. I am an actuary by trade, so do not hold that against me. Right now, I'm leading strategy both internally and externally at Adidot. I'm very excited about this open forum. It is the first of our series, so we are kicking this off. It is a half an hour. Despite the invitation being an hour, we don't want to take up too much of your time. It is a half hour open discussion. It's going to be held monthly. And each month, we're going to do a deep dive in exploring the changing landscape of the life insurance industry. And today, like I said, we're going to look into the impact of AI in specifically life insurance. These monthly forums are hosted by Adidot, but we bring on a partner each month. And of course, this month we have Sapiens with us. And again, this is an open forum, so it's not meant to be a webinar. We are going to start and kick off with, after introductions, we'll talk a little bit about the article that was sent out with the invitation. Hopefully you guys got a chance to read it. And then we're going to really, after just doing a brief summary of that, open it up to discussion amongst the attendees. So please use the raise hand function. You should see that below next to the actions that you can react to. And we're calling you, please unmute, introduce yourselves, and share with us your thoughts on this. So without further ado, I'll turn this over to our two panelists. We have Jennifer Smith and George Katzoff. I'm gonna turn it over to Jennifer first. She's our guest, and have her introduce herself, and then George can follow that.
Great. Thanks, Sherry. Good afternoon, everybody, or evening again, or morning as the case may be. I'm Jennifer Smith. I'm the Vice President of Product Strategy at Sapiens for our life and annuity products. I'm focused really on the North American market, which is going to bring some additional nuances to our conversation today around AI and the future of AI, because our North American, in particular US landscape, is a little different. Jor, go ahead.
So thank you guys for joining us. My name is Jor Katzav. I'm the CEO and one of the founders of Adidot. And thank you for joining this different kind of series of meetings. As Sherry mentioned, the goal from my perspective is to have it an open discussion about the topics that are being discussed. We invited Jen to kick us off, but feel free to gather your thoughts and share them after the first few minutes of talk. So we'll have a fruitful discussion.
Great. All right, I'll kick us off in talking about the future of AI and insurance, and the article in particular that we've all been kind of looking at in understanding where we could be going with the life insurance and some of the changing landscape of life insurance, and how that is being kind of growing with the access to data that we have, and how we can be using artificial intelligence. And again, this isn't a webinar format, so this is just conversational. We've been sitting on a treasure trove of data for many years. Life insurance in the US, for example, started in like 1759. But of course, we weren't collecting and capturing data on these groups of people that we were insuring, whether they were, groups of foresters or, farmers, and, some of those familiar names that we know in the life insurance industry started from that. And we started collecting information as soon as we could, whether it was via paper, but now we're getting the data in electronic form and in digital form. But it's not just the data that the insurance companies have now, right, that we have access to. We have access to everything. Everything we're doing is digital. We know how much sleep we're getting from our wearable devices, how many steps we walk. We know what we're eating. We're tracking what we're eating on other apps. We're tracking our heart rate and our blood pressure, who we hang out with, who we're liking on Instagram, what our hobbies are, life events that are happening that we're announcing to the world in social media. All of that is data that's being collected and can be used in a lot of various different ways and shapes and forms. We know these things, so why aren't we using them? Why aren't we, I just had a baby. I'm posting that on Instagram, on TikTok, on Facebook. There's keywords there, right? I'm putting those keywords out there in public domain, and that's information that can be used. Why isn't someone reaching out to me saying, hey, I heard you had a baby. Have you started thinking about saving for their education? Or, there's lots of different ways that we can make that whole buying experience easier and more beneficial. And those are some of the things that I've been thinking about, is how do we use all of this again, treasure trove of data more effectively in life insurance? And what's stopping us? What is it? Is it the worry and the concern about bias? I mean, that's something that we've been talking a lot about, and trying to make sure there's committees, particularly in the US. We've got NAIC committees on the big usage of big data and analytics. We've got NAIC committees on accelerated underwriting and how much data we can use, and to make sure that we're not creating a bias. So bias is one thing I've thought a lot about, but I've also thought, about certain other elements like consumer trust. We don't want insurance companies to necessarily use this information, because what are they going to do with it? I had a conversation with my husband the other day, and he won't join up, for example, and I hate to throw this word around, Vitality. He won't join Vitality. He's like, well, what are they going to do with my data? I'm like, well, if you read the fine print, they're going to use it to incentivize you to eat healthy, and they're going to give you credit to your grocery store. So again, why wouldn't you use that data? What are we afraid of in starting to allow insurance carriers to use that data? And how cool could it be if we get to a point where we're using life insurance and it's actually not life insurance, but it's insurance for life, and that we can shift it and it can change in the way that we're living our lives. Hazardous activities are something that we get penalized for, but yet it's activity. So why can't it be beneficial activity? Can we actually start to look at different angles and different ways for healthy living, fitness and activity, well-being, diet, all those different things that could really help us and help to narrow the protection gap. So I mean, that's kind of my opening thoughts and some things I wanted to throw out there. And with more access to data, everything that's out there that's digital, what are we so afraid of? Why are we not moving as forward as we could be, as fast as we could be for like P&C insurance carriers, for example? In that article, we saw some really cool ideas. We're not quite there in life insurance.
Thank you, Jennifer, for kicking that off. I think that was a wonderful segue and kind of extracting points out of the article, which did obviously talk about having open mindset and making sure your staff is open to accepting AI, because there's so much a treasure trove, like you had said. So for the audience attendees, if you would like to share your thoughts, feel free to, again, use the raise hand button, or if you are timid and want to utilize the chat feature, that's welcomed as well. Or simply, if the raise hand feature is suggested so we don't run each other, but if you want to just unmute and share your thoughts, that's welcome too. Maybe while you gather your thoughts, you're welcome, George, to share some of his reactions to what Jennifer said.
First, thank you, Jennifer, for the opening notes. I think that's definitely an interesting topic to why people are not using it to that extent. There was an interesting question I saw a few days ago on social media around, if you had to scale from 1 to 10, how much of your data is out there versus how much your data is being used to drive conclusions about yourself, either by the by the government or by institutions. What would be that rating? And I think what if you look through the answers people gave, I think the common answer was that about 8 on a scale from 1 to 10, 80% of your data is out there online somewhere. But on how much of this is being used, the answer people gave was probably somewhere between 3 and 4 of how much of it is actually being used to either, provide them the right product or, or continue tracking them from any other perspective. And I think people have some kind of an hesitation to provide that data, although they do provide it on a regular basis on social media, but they feel some level of concern when this data is actually being used, which is very interesting. Me personally, I think that, if the data that we get, if the data that I provide actually allows companies to give me more tailored offerings, it's actually a better service.
Right.
Yeah, go ahead. I actually like the fact that Spotify gives me only,
get
the music I like to listen to and only the movies I like to watch.
Yeah, exactly. So why isn't it giving me options for insurance that work for me and my lifestyle? We do have a huge number of people who are not protected by life insurance, and that's our goal, is to try and protect them should something happen to a family member, right? So why aren't we trying to find ways to make that easier for people to and narrow that protection gap and find ways that are tailored more to them and their likes, and it's not such a scary proposition. And I think that's
And I would
exactly.
add on to that, Jennifer. I would even add on to that, like sometimes, like Laura said about the songs that are recommended, you never heard of that song, and then you realize you like that song, right? You find a whole new artist, you find a whole new album. I think it's the same thing with life insurance, where, maybe people don't know what product they should be getting. They don't understand that there's another product out there, which is a variation of something that they did know that actually is a better fit for their lifestyle.
And that goes very well to the whole thought that if we're using AI effectively and we can start to look at how people are behaving, we can start to think about new products that could evolve from this as well. So it's not just on the consumer side, but it's also on the insurer side to say, how can we use it more effectively? Obviously also in our underwriting processes. And, can we look at a huge demographic of people who are not protected and say, what do we know about this group? What are the common denominators? How can we find a product that's going to help them should anything happen, and protect them? And I think that, again, that it gives us a perfect opportunity to start to think outside the box and a little bit more creatively by just learning through AI and data, and then asking those questions. I mean, I'd love to be an underwriter out there saying, take a look at this person and tell me whether this product is a right fit for them, or an agent. Tell me whether this product is the right fit for them, or what product would be the right fit for them. And those types of evaluations. I mean, it sounds kind of Star Wars, but
Right.
It's great. It's a cool idea.
So we do have an audience member, Nan, who is asking about genetic testing results, and perhaps do the views differ when it comes to something more personal to a specific person, not just their music taste or their grocery taste, but their DNA, their genetic testing results. Any thoughts from either of you?
I have actually thought a lot about genetic testing results and all sorts of different types of actual, real, tangible pieces of data that we're learning about people. As testing gets better, we're learning more about genetics and how they play into risk evaluation mortality. So I think, should everybody, right now, it's almost like insurance for the masses, right? We have this mortality rate that we've calculated, and that's how we use and price our products. But if you're looking at more specific products, are you looking at then could it negatively or adversely affect someone if you're saying, because of this genetic testing, you are more prone to this condition, and therefore we need to rate you differently or provide a different product for you that is going to be more costly. So those are the things that I think we need to balance, and we need to understand how then we can more effectively offer life insurance. So that was one of the things. I mean, I also just recently talked to an insurtech company who is using geospatial data for identifying respiratory illness. So by county, they can say where there's more incidence of things like COPD, COVID, asthma, and different types of respiratory illness. And we're starting to look at that. How can we use that data?
Yeah, so one of the questions that came in was about, sometimes we've always obviously raised the issue of concerns of using specific data that's customized for certain people. And, I used to tell people, my staff members, don't just bring me a problem, bring me a solution too. So maybe let's pivot to that. Is there, one of the questions was, is there some easy way to bring comfort to people who are concerned about their data usage? Seems like there could be a statement of guarantee of sort for data use for helping with better service and lowering rate. Any ideas of how we can maybe calm the nerves a little bit?
Trying to gain consumer confidence a little bit more. Yeah. I think, really what it comes down to is transparency, right? And that's one thing that I feel very strongly and passionately about, is making sure that customers understand what they're buying, understand what the coverage is, and why, if we're declining them or rating them or, telling them what they can and cannot have, we're being very specific about the reasons. And I think that level of transparency, we have to do it, right now, right from a regulatory perspective, we have to be able to tell someone exactly why they were declined. And then they have to have the ability to come back to us and say, yeah, but, right? So, and we need to have that audit trail. So I think it's really about that transparency, and providing an understanding to people, like my husband, when I had the conversation with him about how is your data being used? What is it? How is it helping us make our decision about what product we're offering you, what rate we're offering you, how you're being covered, etc.
I agree. I think transparency, communication is always the key to just garnering trust from whether it's a company or just people relationships. So I definitely agree with that transparency. So let's pivot a little bit. And another question came in, basically along the lines that, as you start to nano segment, right, and micro segment different areas in your customer base, which is a byproduct of being more customized, right? Customizing services for specific people. You end up having, winners or losers. So the question is really focused on, describing the situation, which is I often think about how the idea of rewarding some people, such as, hitting a certain achievement, like, taking so many steps during a day or buying healthy food at the grocery store, whatever. And others will perceive it as a negative bias for those that don't hit those same benchmarks. So that being said, hasn't the nature of underwriting with preferred standard ratings always been the definition of bias and discrimination? Do you agree with that? Do you have thoughts on, has it always just existed, but we're kind of just pivoting and thinking about it differently?
Yeah. Dror, do you want to go ahead of me?
Yeah, I can go. I have a very strong perspective about this, which is bias is always a political decision. And underwriting by definition is differentiating between different groups and giving them different prices. So by definition, it's a bias. It's just a bias that we decided as a society that we are comfortable with. We're differentiating, male and female on different prices. We differentiate different ages on different prices. It's just that we decided those categories are categories we're comfortable differentiating. The categories, on the other hand, such as race or others, that we decided that we're not comfortable differentiating on price as a society. Therefore, this is not a parameter that we take in. And I think one of the things that have improved dramatically in a regulatory perspective in the last few years is that regulators, and especially regulation coming out of New York and California, are very specific in what they consider as a legitimate bias versus a non-legitimate bias. And as clearly defined as this regulation would be, it would make everybody's life easier making those judgment calls on the fly. For example, as a data company, we know which data points we can take into the model and which data points we cannot take into the model. And testing the models on bias against different parameters is a standard practice that you can easily run. The challenges start when the regulation is not clear enough. Therefore, you find yourself in some kind of a gray zone, not knowing if what you did is right or wrong. But as the regulation becomes clearer and clearer, it actually makes everybody's life easier on knowing if what they've done is, on which side of the aisle is it.
But Dror, do you think then we also have to consider how an individual person has already inherent bias as well. I mean, compared to artificial intelligence, which shouldn't, right?
It's a great question. One of the first, implementations of AI was to try and mimic the advisor behavior or the underwriter behavior and so on and so forth. You could speculate those underwriters already make mistakes and already have some biases and already have some, not all of their work is 100% crossing all the T's and 100% correct. It is what it is. And if you're mimicking that behavior, the model mimics those mistakes as well. Which is, the data that goes into the model is what makes the models, make the decisions they make.
Right.
We just need to decide what is the level of confidence that we allow the models to live with.
Do you think we can improve the level of confidence, consumer confidence about utilizing AI if we started in other places rather than in underwriting, and maybe started it in the service area and tried to provide a better experience using AI there? And then once we kind of take those baby steps and try and figure out how help with the experience, whether it's making a policy change or starting a claim process, maybe having some more empathetic experience that's faster, that's quicker, and doing those changes, those service changes a little bit more effectively, and then starting to ease into that underwriting process that everyone is so sensitive about.
Yeah, and we definitely as a company put a lot of emphasis on those areas, on the service side, and especially the areas where are mostly the areas that are most neglected. Like after you buy the policy, all the later on servicing components for upsell and cross-sell and additional needs, and is the policy still the right fit for your needs, and so on and so forth.
Exactly.
And in all of those areas, you stumble upon the same questions from a bias perspective, but the net you provide better service to the consumer, which makes everybody's life easier.
More of a pay as you live kind of concept, and that it's your insurance kind of grows with you or can potentially change with you. As I'm not the same person I was when I first bought a house. I've got 3 children, 2 of them are already out of the house. Now I've only got 1. So should my insurance be reflecting those changes in my life? And
that's precisely what the article talked about too, right? The pay by scenario, right? Each Airbnb, for example, the rental that you do, you buy insurance for that. So one more question before we wrap up here. This is from Jessie, and she's asking about go-to-market strategy, right? So she starts with saying, developing AI models is not cheap, and we certainly know that in-house. And hence, in your opinion, what would be the best go-to-market to deploy AI into life insurance, especially for independent groups?
So say that last part again, Sherry. I didn't hear those last couple words.
So basically, I think the question is asking, and Jesse, feel free if I'm not stating your question correctly to unmute and correct me, but AI models are not easy to develop. They're not inexpensive, right? It is a big investment into developing these. So in your opinion, what is the best go-to-market strategy to really deploy these AI models into the life insurance industry, especially for those undercovered groups? That, I think presumably don't have the right amount of coverage or don't even have life insurance.
I think right now we're just still in those early young kind of crawling before we walk stage of evaluating and using AI. I think the goal would be to really predict and prevent rather than try and use AI to judge. I think, if for lack of a better word, I think that's where I would probably want to spend more time is trying to, for example, take my book of business and look at ways or tactics or similarities and ways that I could potentially predict and prevent early death or any other types of changes I'm seeing in ways that I could engage with my customer more effectively and be a partner to them rather than just keep charging them their monthly rate for something that may or may not be relevant to them anymore. You know,
Absolutely.
that's-
And I would think, even at point of sales, right, that so many customers walk in thinking they need life insurance, but they actually do not know specifically what's right for them. And they don't even know the coverage amount that's right for them. So the AI could enable, product recommendation engine that I think some brilliant AI company has developed already. And really understand that, provide that understanding to those who might not necessarily have access to it, right? That either prohibitive, either through an education level or even through a financial situation that they might not be able to purchase the amount that they need. At least, they could come, the AI prediction can help them come up with, an alternative source that better fits their needs.
Yeah, something I actually had a conversation with that just honestly about that topic 2 hours ago, about that, this product might not be suited for you. Maybe you should be looking at this one instead. And that's something I think we really do need to be doing more of, and really taking into consideration the needs of our customers more effectively.
Absolutely. Or anything to add before we close?
No, thank you very much, everybody, for joining us for this session. I'll let Sherry wrap up. I'll just use this opportunity to say thank you for Jen for participating and kicking us off. And thank you, everybody, for joining.
Yeah, great insights. Thank you to both of you. And thank you for, taking some of your evening or afternoon or morning to join us today. I do want to say that that the future forums in the months to come, again, are all focused on really just the changing landscape of life insurance. But we've kind of identified a few topics in the future that we're going to hone in on, such as talking about the challenges and the impact of health and wellness programs on an insurance brand, and can they increase loyalty and retention. Also, we are facing a issue in the life insurance industry of a lot of agents retiring and not really having the replacements of the younger generation into the population. So, how do you deal with the shrinking agent population and motivate new talent to join the life insurance industry? That's been a big issue in the life insurance industry. We're going to do a deep dive into the digital growth of life insurance and talking about the challenges and trends surrounding that, as well as boosting distribution channels in 2023. So thank you again for everybody. Hopefully you can join us next month again and we can have further discussions about these topics.